Let's welcome our guest on board. We have Mr. Feroze Azeez, Joint CEO at Anand Rathi Wealth, to share with us a fresh take on the markets. Warm welcome to you, Feroze. Good to have you with us as always. I want to take a fresh perspective on the markets. The last time that we met, we had not seen such a sharp fall on the crude oil prices. Now there are concerns on the macroeconomic front that are further easing. As in when we have entered into the second half of the calendar year, there's a shift in investor sentiment, and you're seeing that reflect in the markets as well. The big question is, will the markets have enough to sustain this kind of a momentum? Because in the last couple of months, we have seen every time a resistance play out around 24,300 odd mark. So will we have the strength to go beyond where we are today?
Hi, good afternoon, Sakshi. Like you rightly said, we've had a resistance in the market, and surprisingly, the resistance has been very strong. It seldom does it happen that the April, May, and June month-end expiries have ended very precise at 24,000 plus or minus 100 points. It seldom does it happen that the full quarter goes by and Nifty has done nothing much, point one. Point two, I've already said in several channels and maybe in yours as well, that crude oil is one of the variables which is predictable. We looked at last 50 years data. How many ever times crude went up 50%? There were 13 such instances. 11 instances, crude oil came back 28% lower 1 year from now. 1 year from the time it actually moved up 50% or more. There were only 2 instances where crude prices didn't come back down, were in the global financial crisis when the demand was recovering, and during COVID when the demand was recovering. Every time there was a supply shock, crude oil prices came back down. So we had predicted this. I had said 85 is going to be the mean for this financial year. As of now, the mean is 90. I think mean is what will decide the economic impact of crude. Traders might look at higher prices and lower prices. A country will have to look at the mean prices for the year. That, as of now, stands at 90. For this year, it will be 85. So can we sustain the macroeconomic variable of one of the largest expenses which we had, which was not avoidable? Gold as an expense was avoidable. And I think government is now doing a lot more to avoid the gold import. But crude import was something which was not a discretionary spend. And so I think economically, we will do well. Will the market sustain? That was your question. I think the market is been buoyant. I think it will retrace back the 25,200 level, which it fell from on 26 February when the war broke out. I think it will be retraced sooner than later.
Okay, we can retrace back to over 26,000 levels. Let's see how much time does it take. Feroze, we were talking to you about the ethanol blends the last time that you came in. Now we've also seen the Delhi government roll out its EV policy, so a lot more focus on the entire auto sector. The way the industry is shifting its focus now on environment-friendly first fuels, as well as on the vehicles that they're going to be manufacturing. As a market participant, how are you looking at this transition? And for an investor, what does it mean?
I think transition is critical. I think the E20 compliance is behind us. The flexi fuel is what I think will create a large product upgrade, and that will create a lot of ancillary demand, point one. Point two, I see this as a message in terms of our import bills and where our rupee is today, right? Our rupee is at 95, and we have very sharply deteriorated in terms of our strength relative to other global currencies. I think we're doing our best to make sure that our dependency on crude oil import comes down dramatically. So I think the fact that government is doing a lot of stuff, and then if you read this ethanol blend as one of the actions to make sure that we're not spending our dollar reserves for things which are avoidable, right? If you look at how government has brought in FCNR deposits, leverage has been permitted to some banks. So a foreigner or an NRI or a person of Indian origin is able to make 13-14% in dollar terms sitting in the comfort of the country which he currently or she is currently there. So that is looked at. Today now we've been always doing this whole abhiyan of gold being sold. Even if Indians sold 1% of the gold, we will not need any gold imports for this year. 1% of gold. Even if people book that much profit, we will have no need of gold imports. And last year, we imported 72 or 73 billion dollars of gold at the peak prices. Unfortunately, the buyer also lost money. The country lost dollar reserves. Our rupee is at 95. A large portion of that is attributed to a discretionary spend. When you have 30,000 tons, you still try and get some more. Makes no sense. You're almost consuming 1/4 of the world's production every year. So I think if you look at this ethanol blend as a larger message, I'm very happy and excited. And I'm sure there will be in the auto space adoption reasonably quickly because the message is clear as well.
Okay. Feroze, I'll take a view from you on the Indian IT sector and, this growing focus on AI. Now, the government is looking at the regulatory part, the legal part, as well as what is needed in the times to come, as well as to how this entire technology shift will take place. Plus, we are looking at how a lot of Indian IT makers are now focusing on expanding their AI presence. We've looked at how HCL Tech came out with that, news flow of $1 billion acquisition there. We're now talking about Persistent and Nagaro's acquisition. So a lot of Indian IT companies are realizing that they need to speeden up their own focus as far as AI is concerned. How would you look at the Indian IT sector? Because so far we've had miss on this space.
You're absolutely right. IT sector has disappointed, if you to ask me pointed, I would say the worst of the slowdown is behind us. That's point one I'm making. Point two is whenever slowdowns are over, when the sector recovers, there will be a lot of people who've been waiting to exit. Right? Those guys, the weaker hands, will start getting to exit. So when that happens, you will not see sharp recoveries unless all this ownership, which has been impatiently waiting and have been disappointed with performance, is waiting. At every point in time, there will be some degree of resistance which will come. So sharp moves, sharp sell-offs. So you can't escape volatility in these stocks. The irony was IT sector was a defensive sector.
Yeah.
All I'm trying to prepare the viewer that it's going to be a high beta sector for some more time because ownership will have to change hands. That's point two. Point three, I think people are moving from cost cutting to AI-led transformation discussions. And that is what you rightly highlighted as well. So I think when that happens, the disadvantage which India had faced on that whole not having an LLM, not having the AI infrastructure providing capability also, I think that will turn out to be an advantage in the next 6-8 months to a year's time frame. So to answer your question, I would say the worst is behind. Volatility is not behind us. Volatility will be there, especially in a sector where there's been so much disappointment. You will see a lot of ownership changing hand, and that is what creates volatility. In the top 10 constituents of Nifty, you have 2 IT stocks.
Yeah.
There used to be 3 or even 4. That slipped. Now you have 2 IT stocks. You have 5 private sector and 4 private sector, 1 public sector bank. I think IT will contribute to Nifty as well. Which it has not. It has been a drag on Nifty. I think it should perform better.
Okay, so we have the first question for you, Feroze, coming in from Pratik Bharadwaj from Ujjain. He asks you, is the real estate sector a good investment at this stage?
Real estate is a good sector, but the kind of divergence in this sector in terms of stock performance is enormous. So you will have to be very bottom up in a sector like that, because there are several listed developers. All of them operate very differently in different regions, different developments, different ticket sizes. So real estate is definitely a very good sector, but it has to be bottom up, not top down. See, there are some sectors which have very, very good representation in Nifty and NSE 500 in terms of weights, not just in terms of numbers. Real estate sector is not one of those. So any sector which does not have a reasonable proxy to Indian economy as a whole in terms of what stocks you end up picking, because there are so many developers but very few listed developers. So I think bottom up, IT real estate sector is definitely a place to be, but be very choosy about which business you buy, and there should be very specific reason why you buy that specific company.
Okay. We also have Payal Saini from Jalandhar asking you, how big is the quick commerce opportunity for long-term investors right now? How do you gauge names like Zomato, Swiggy? We're also awaiting Zepto IPO now and several others in the quick commerce space now.
I'm not very positive about those. Why am I not so positive about those? Is those stocks like you've mentioned have now a part of, now let's assume Ethanol is a part of Nifty. I'm not giving an advice or giving a recommendation to sell. I'm just giving an example that Ethanol is a part of Nifty. When something is a part of Nifty, you get a lot of money from index funds. In India, about 8 to 9 lakh crores of Nifty and Sensex ETFs exist. So if you're a part of Nifty, you get a lot of influx. That has already happened. And so you might have a tailwind coming from index and passive investing rather than a headwind. So you will get a headwind rather than a tailwind. Initially, when some businesses get listed, they become a part of indices. That's what happened to SpaceX, and that's where you see initial rallies. So I think profitability is something which Indian investors always chase. If 90% of Indian investment was in passive, like in the US, then profitability can take a back seat. We have 85 to 90% of Indian domestic money is actively managed, and active fund managers are very possessive about their stock portfolios, EPS growths, and EPS in itself. So I'm not very bullish on the long-term story of non-profitable businesses, which have found it very difficult to actually become profitable, as unlike the hypothesis that you can change margins marginally and then come into huge profits, that exponential growth has not happened for stocks which have even got listed in this space 3-4 years back.
Fair point. Well, we'll thank you then, Feroze, for being with us on the show today. We're right out of time, but thank you so much for your insights.